What's up everyone? Welcome back. In today's video, we are doing a deep dive into the QQQ ETF. We will be covering what it is, how it works, the fees, and then my own thoughts as an investor who owns this ETF myself. Let's get right into it. So QQQ is an ETF that stands for Invesco QQQ Trust Series 1. An ETF stands for Exchange Traded Fund, which is basically a basket of assets that is traded on the stock market as a single unit. In this case, QQQ holds 61 different stocks, but don't worry, we'll get more specific on what these stocks actually are in a minute. Now, the reason why it's called the Invesco QQQ Trust Series probably doesn't mean much to you now, but if you look into the ticker symbol, QQQ, it will tell you that it is managed by Invesco, and Series 1 just means that this was their first ETF offering. The purpose of this ETF is to track the performance of the NASDAQ 100 index, which is basically an index of the top 100 non-financial companies listed on the NASDAQ stock market. The goal of this ETF is not to beat the market, but rather to match the return of the NASDAQ 100 index. This is done by holding the same 100 stocks in the same proportion as the index. So if a stock in the index goes up or down, QQQ will go up or down proportionally. The benefit of this is that you can get exposure to some of the biggest and most innovative companies in the world with just one single investment. You might think, well, that makes sense, but why would you want to do that? Well, the reality is that when you invest in the stock market, there are very few people out there who can actually pick individual stocks that outperform the market on a consistent basis. Warren Buffett is probably the most famous investor who has been able to do this, but even he has said that it is extremely hard to do over a long period of time. So for most people, including myself, the best strategy is to just invest in the overall market through a low-cost broad index fund. And that's exactly what QQQ is. A broad index fund that tracks the top 100 non-financial companies in the NASDAQ stock market. The largest companies in the QQQ ETF are Apple, Microsoft, Amazon, Meta, and Google. These 5 companies alone make up 54% of the entire ETF. So you are essentially getting exposure to these 5 giants along with 95 other companies. One of the main benefits of this ETF is its diversification. As I mentioned earlier, it holds 61 different stocks, and these stocks are spread out across 12 different sectors. This means that you are not putting all of your eggs in one basket, and that you are protected against the risk of any one particular stock. Another benefit of this ETF is its liquidity. It is traded on the New York Stock Exchange, and is one of the most actively traded ETFs in the world. This means that you can buy or sell shares of the ETF at any time during the trading day at a price that is very close to the net asset value of the ETF. Let's talk about fees. The management fee for this ETF is 0.6%, which is pretty standard for an actively managed ETF. This means that you will pay 0.6% of the assets under management each year to Invesco to manage the ETF. Keep in mind that this is not a one-time fee, but rather an ongoing fee that is charged every year. Overall, the QQQ ETF is a great option for investors who are looking for a low-cost, diversified, and liquid ETF that tracks the top 100 non-financial companies in the NASDAQ stock market. It is a good option for both long-term investors as well as short-term traders. I personally own this ETF myself, and I plan on holding it for many years to come. If you enjoyed this video and learned something new, please make sure to like and subscribe. Until next time, see you guys later.